Hello everyone, welcome to my YouTube channel Indian Bull vs Bear. In today's video, I will share my analysis of historical trends of the non-ferrous metals sector. This video is part of the series The Final Missing Piece. Before moving on, please read the entire disclaimer carefully. So the non-ferrous metals sector includes companies engaged in the mining, production, processing and distribution of metals other than iron and steel. Key metals include aluminium, copper, zinc, lead, nickel, tin, and precious metals like silver and gold. Non ferrous metals are widely used in industries such as automotive, construction, aerospace, electrical equipment, packaging, and renewable energy. The key growth drivers for this sector include infrastructure and construction, growing electric vehicles market, and increasing focus on renewable energy. The government supports this sector with policies such as Make in India, production linked incentive that is PLI schemes, and infrastructure spending enhancing demand for metals. The major challenges that the sector is facing includes raw material volatility, environmental regulations, currency fluctuations, competition from imports from countries like China, and energy costs. So now in order to identify trends in this sector, I will present two graphs. These are the end results of my analysis of the share price movement of last 10 years of top 10 companies of this sector. The top 10 companies of this sector comprises of 4 large cap, 1 mid cap and 5 small cap companies. The first graph will show the yearly returns, whereas the second graph will show the monthly returns. Let's check out the yearly returns graph. So this is the yearly returns graph. The green bars in this graph shows the positive yearly returns. The red bar shows the negative yearly returns. The green line shows the number of months with positive returns. The red line shows number of months with negative returns. And this orange line at the bottom over here, this shows the cumulative returns. So in 2015, this sector performed very badly and managed to give negative returns of minus 21.39% with 6 positive months and 6 negative months. In 2016, the sector gave very good returns of 55.10% with 8 positive months and 4 negative months. In 2017, the situation improved further and the sector managed to give very good returns of 105.47% with 11 positive months and only 1 negative month. But 2018 and 2019 proved to be very bad year for this sector, uh, in which in 2018 the sector managed to give returns of negative returns of minus 27.18% with 8 negative years and only 4 positive years. Similarly, in 2019, the sector again gave negative returns with minus 22.10%, 8 negative months and 4 positive months. The situation improved in 2020 with with the sector managed to give positive returns of 19.64% with 7 positive months and 5 negative months. In 2021, the sector skyrocketed and managed to give returns of 134.38% with 8 positive months and 4 negative months. In 2022, uh, the sector managed to give average returns of 17.09% with 8 positive months and 4 negative months. In 2023, the sector gave very good returns of 71.34% with 10 positive months and only 2 negative months. And in 2024, this sector performed very well again and gave 64.45% returns with 7 positive months and 5 negative months. If we see the cumulative returns, this orange line, if we follow it, over the last 10 years, the cumulative returns are 1,214.35%, which are just above 13x. So 13x in last 10 years. Let's see the takeaways. So the first takeaway is the cumulative return of 1,214.35% which is just over 13x. We have just seen that. CAGR of 29.38%. Very good CAGR of 29.38%. But net negative yearly return. So 3 years gave net negative yearly return. So this is not good for the sector. 2015, 2018, and 2019, 3 years in which this sector gave negative returns, negative yearly returns. So this is something which needs to be keep in mind for those who are interested in this sector. Best year, 2021, with 134.28% returns and 8 positive months and 4 negative months in that year for the sector. Worst year was 2018. 2018 with negative returns of minus 27.18%, 8 negative months and only 4 positive months in that year for the sector. And positive to negative year ratio is 2.33 is to 1, which is 2.33 positive years against every negative year over the last 10 years. Let's see the monthly returns graph. So this is the monthly returns graph. The green bars here shows the positive mean monthly returns, whereas the red bar shows the negative mean monthly returns. The red lines over here shows the number of years with negative returns, whereas this green lines shows number of years with positive returns. So let's see. We'll start with January. January over the last 10 years has given negative returns of 1.18% with 6 positive years and 4 negative years. February has managed to give negative returns of minus 0.52% over last 10 years average, and with 8 negative years in the last 10 years and only 2 positive years. March has managed to give negative returns of minus 2.24% in the last 10 years with 5 positive years and 5 negative years. And April seems to be a very good month for this sector with 8.49% average returns and 8 positive years in the last 10 years. May again, a bad month for this sector with average returns of minus 1.39% with 6 negative years and 4 positive years. June, with the average returns of 2.44% and 6 positive years and 4 negative years. July seems to be a strong month for this sector with 6.28% average returns and 8 positive years against only 2 negative years in the last 10 years. August, again a strong month for the sector with 4.88% returns, 7 positive years and 3 negative years. September with almost negligible average returns of 0.15% with 6 positive years and 4 negative years. October, a decent on an average month with 2.41% average returns, 6 positive years and 4 negative years. November, a bit better as compared to October with 3.19% average returns, 7 positive years and 3 negative years in the last 10 years. And finally, December seems to be a very good month for the sector with 6.77% average returns, 8 positive years and only 2 negative years in the last 10 years. So let's see the takeaways. First is the cheaper months. So February, March, and May are the cheaper months for this sector, with February giving negative returns of 0.52, March with negative returns of 2.24, and May with negative returns of 1.39%. Amongst these three, I think February is the worst because out of last 10 years, 8 times it has given negative returns in the month of February. March, we can give some discount based on the fact that um, 2020 COVID crash happened in March, and the entire market was crashed in that March 2020. and May has 6 negative as compared to 8 negative years for February. What else? Costlier months: April, July, and December. So, April with average returns of 8.49% and 8 positive years. July with average returns of 6.28% and again 8 positive years. And December with average returns of 6.77% and again with 8 positive years. So, these 3 months are very strong months for the sector. And positive to negative month ratio is 1.55 is to 1, which means 1.55 positive months against each negative month over the last 10 years, that is over the last 120 months. So that is all from my side in this video. Thanks for watching. Please subscribe to the channel, like the video and comment on it. I'll be back soon with another video. Goodbye for now.